So hi, it's Mark Richardson again, and here's the second video in the series on how to demonstrate Mondial. In the earlier video, we started off with how to set the thing up, how to create all the screens and all the tabs that you need to sort of seamlessly go through the product and show the value to somebody who's not seen it before. So assuming that you've seen that and assuming you've set your own environment up, what I'm actually going to do now is a quick 20-25 minute demo on actually taking somebody through the demonstration and talking through what the value is to them. Obviously, in most circumstances, you'll have already done a discovery. You may need to tailor this a little bit. So what we're going to show now is just a canned version, assuming that we don't know anything about the prospect that he's seeing. So what I'm going to do is I'm going to share a screen. And then I am going to turn my own video off so that my pretty face doesn't turn up and you can concentrate on what I'm showing you. So let's go. So when we first talk to a prospective customer with Mondial, we always start off with this diagram. It comes in the marketing pack you've got. It's called a one-page summary, and it's a diagrammatic representation of what we're trying to do. And I always start off by talking about the fact that at the end of the day, we're a reporting company. We provide financial reports for users, whether it's for their management, whether it's for a parent company or a group consolidation perspective, or whether it's statutory reporting in the formats needed by a government or a regulatory authority and so on. We tend not to stress things like analytics, although we can do various management reporting, and that's really because there's lots of tools out there. We really position ourselves as the formality, the accountant's tool, the ability to provide the data you need in the format you need, with the backup of being able to drill into that detail and actually see what the balances are made up of. And sometimes, depending on the circumstances, we talk through the various output methodologies, ranging from just Excel and PDF and on screen, to being able to upload to a site in XBRL format, and even being able to be used as a repository through which data may be then exported to a Tableau or a Power BI or some sort of analytical tool for that type of slicey dicey type reporting. But really we're into formal P&Ls and balance sheets. Where we always start is we talk about the fact that Mondial can bring its data from any ERP. This video is being put together with SAP Business One partners and users in mind. And in that particular situation, you can link to any number of companies on the same server, whether that server is local or hosted, or you could even have Business One running on multiple different servers in different parts of the world. And we can bring the data out from Business One in real time. We can we have an agent sitting on the local server which pushes the data every time there's a new accounting transaction, and we find that particularly important at the end of the period when people want immediate access to the reports and they've only just done some adjustments in their underlying system. Now, I'll talk about that in a little bit more detail when we get into these three areas here. Our entire process is that we're in the cloud and we take Business One data into the cloud from each server that a customer operates. And what's very different about Mondial is it uses transaction level data, general ledger, AP and AR. It doesn't just use GL, it doesn't use balances. And that's very important when it comes to auditability and being able to answer your own questions, because many times we'll have accountants who say to us that they've spent a lot of time building the reports they need, beautiful format, and then they can't answer the first question because the data they've got access to does not include all the detail from their underlying accounting system, whereas Mondial does. A couple of things that we will show during the demo. When we bring the data in from these different systems, if currency is important, in other words, if the underlying systems operate in different currencies, we translate all of that data very accurately against each transaction into all of the reporting currencies you need. And secondly, if your accounting systems have been set up differently, whether they're SAP Business One or whether it's a multitude of ERPs, you often find situations where the charts of accounts don't match. In Mondial, you can set up charts of account so that you can map the underlying chart of accounts data to these centrally managed ones, meaning that when you then produce the subsequent reports, they're based on these centrally managed charts, and every bit of data from every underlying company is already normalized and pointed to the right place on the report. The second thing that Mondial does, and we'll show, is that it allows data to be adjusted. And in the majority of cases, people would say, well, wouldn't I do those adjustments in the accounting system? And the answer, of course, is yes, if you possibly can. There are situations where that just doesn't occur. If you haven't got the reporting currency, for example, in your underlying system, and you've had to translate into another currency, there's still the question of revaluation at the end of the period, and we can handle that in Mondial. Sometimes companies set up a separate company just for the process of doing eliminations and intercompany adjustments. Well, those can be done in Mondial. And the advantage of that is, unlike something like a spreadsheet, where they are the only link between the reported balance and the underlying data, here there's a full audit trail from the balance you report right back through the intercompany and elimination entries right through to the source data. But possibly the most important one that we come across is when people have to report in multiple GAAP. Let's say you've done your accounts in US GAAP. If you need to make an adjustment for IFRS or some other local authority, if you do that in your underlying system, you can mess those results up. Mondial allows you to have a layer on the top where you could do those adjustments and include them or exclude them in the appropriate reports. And we call that our multi-ledger system, so that we actually take single ledger systems from all over the place and actually turn them into multi-ledger systems for global reporting. And the final thing I mentioned when I do this, this prelude to the demo, is I say it doesn't matter what point in the process you are, whether you've just brought in the data in its raw form, whether you've made your adjustments, whether you've built custom reports, different views of the data, grouping together different accounts, you've always got the ability to drill down and see the underlying transactions that make up that balance. And that comes because we bring in the actual data from the underlying system. So that's how I normally preface the demo itself, gives people a sense of what they're going to see. We do go through things in this order with constant reference to the fact that you can see the detail. So that's where we start. I'm now going to move this to one side, and I'm going to bring onto the screen the information that we set up when we showed you in the previous demo how to set up for a demo. Now, this is where we start. We start with the OEC demo companies for all the different regions that SAP has created them for, or many of them anyway. And you can see that they're all different countries. They've got different currencies. They've even got accounting segments of different numbers or different lengths. And we always use that to sort of indicate that we can either link to multiple ERPs, or even if it's the same ERP, they may have been configured in completely different ways. Now, where we start is we start with a simple trial balance. Always start with the simple factor. In fact, before we even jump into the trial balance, we often point out how simple the application is to look and to use. You've only got 3 menu items. You've got the ability to set up, the ability to create adjustments, and the ability to report. Within reports, you've got the standard or template reports that come with the system, like trial balances, like we see here. Or you've got the ability to go in and create your own custom reports and the different layouts for the components that make up those reports. And it's very easy for people to follow. So in this template report here, you can see we've set up a UK company, or we're reporting on the UK company, a trial balance, the end of 2019. We're reporting in pounds. We are using the chart from the underlying ERP system, and we'll talk more about that soon. We've prepared the accounts in line with IFRS, and we're preparing the output to the screen. And as you scroll down, you can see just a regular trial balance. Here's the balance. We're going to look at this depreciation account in a minute with the £6,000 balance. But what I'm actually going to do first is I'm going to move to a second report, which is absolutely identical. Same company, same TB, same period. The only thing that's different is I'm reporting this in Canadian dollars. And you can see that I was able to choose from my available currencies. If I scroll down, you'll see that my depreciation is now 10,000 Canadian dollars. And if I drill into that, what you'll be able to see is the £6,000 from the underlying system and the 10,000 Canadian dollars. And you can see all of the transactions. There was zero at the start of the year. It was a P&L account, $10,000 at the end of the year. And so if I can pick a transaction, I can go into it, and you can see that in addition to the GL accounts for that particular line item, I can see all the GL transactions associated with that particular transaction, which was a monthly journal. But from the bit that I'm showing you right now's perspective, I can also see these transactions in US dollars and Canadian dollars. Question becomes, well, how did you do that? Because those aren't in my underlying system. Well, when we set up the UK company, we said, I also need to report in these currencies, and this is where I need to get the exchange rates from. And when you first set up the company, you can use the European Central Bank. You can use your own source if you want. We can link to it. We use ECB because it's free, very accurate, very long history of data. But what then happens is that as every transaction from the underlying system comes into Mondial, we look at the date of the transaction, we look at the currencies that you specified, we look at the source of those currencies, and we take the appropriate exchange rate, append it to the transaction, and this information is actually stored in the database. This is not virtual. This is actually now added value that goes with the original data that we brought in. So you've now got every transaction for every company and every currency in which you need to report using highly accurate dates on an automated basis. So that's the first part of what we call the normalization, getting the data in the right, in a common reporting currency or currencies. The second thing is that we have this concept in Mondial called alternate account sets. These charts of account here are ones that I've been able to set up. So if, for example, I need to report to the Chinese government, I can click on Chinese statutory, and you can see there is the chart of accounts that the Chinese government insists that you use. Now, there are two values to this. The first is, as we see here with the group chart, this is used internally when all the accounts, charts of accounts have maybe been set up a little bit differently. Some you might try very hard, but there's always discrepancies occur. People use the wrong account for this, and then they won't map together on a report. So this group chart now is the chart that you would use to be able to map everything to a common standard. And then if you have to report to various authorities, you can also map the chart of accounts that you use for management purposes to these regulatory charts, and then produce your accounts or your reports or your TBs or whatever using this chart of accounts, knowing that the data from the underlying system has been mapped to it, and therefore you can also work backwards. Now, where does this play out? If I now go to the chart of accounts for the UK company, you can see that there's the 6-digit account code for the chart of accounts. And in this particular situation, I've chosen the group chart, and I have mapped each one of my GL accounts to its group reporting equivalent. And as you scroll down, you can see we've done that for all of the accounts. We pre-did it. It's something that you can do via an upload. You don't need to go through each line item of every chart of accounts and do this, but you can actually set it up, and you can go all the way down. And if we look at the sales accounts a little further on, you'll see that I've mapped all the GL accounts to 1 or 2 sales accounts, and I've done that for a second chart of accounts, and that just gives us a good example. So if we scroll all the way down to the 4,000s, you can see, or the 400,000s, you can see all of my management accounts. I've actually pointed them all to the same group account for the UK company. And I've done the same, and we'll look at it later when we look at the US company. Now, if I go back to my trial balance, and you can see the UK company, the end of December, Canadian dollars. Now I'm actually pointing not to my underlying chart of accounts, but my group account. And where this plays out, that if I scroll down to the sales account that I just showed you, there's the sales. I can drill into the sales account, and I can now see all of the 6-digit account codes, which I had mapped to the single sales account using the group chart. And then when I actually drill, I think I drilled on this first revenue account, I can see all of the transactions that make up the balance, just like we saw before. This time, I'm going to pick this $10,000 sales invoice. I'm going to drill into it. You can see all the GL entries. There was the line item that went with that particular account. There are the other line items. But because it's a sales invoice, I can even click on the sales invoice, see the customer, the invoice number, and the individual line items that make up the total. And what that really means is that from however I present this data, now this is a TB, I'm able to drill down from summary figures through individual GL accounts, through to transactions, to GL entries, all the way through to the line item detail. And that type of auditability, that type of access to data is useful not only for regulatory authority support, it's also used when the boss takes a look at the report and works out for himself what a balance was made up of, instead of sending you emails and chiding you and for not providing the level of detail he needed. Now, the final bit that we're going to focus on in this setup bit, and I'm just going to pull this back over for a second. What we've really done is brought this data in here and we've normalized it. We've translated it and we've mapped it to a similar set of accounts. Before we get into the report writing itself, I'm now going to have a look at just a simple adjustment, just to sort of show you the capabilities of what we can do. So Mondial has this concept of ledgers. These are user definable. They're available here on the main menu, the ledgers here. And what you can do is you can create ledgers for all the different reporting authorities or reporting audiences that you need, where there may be a need to do adjustments prior to submitting those reports. Now, this is where it plays out. I'm going to go into a standard Mondial journal. We showed you earlier when we were doing the setup how to get there, but it's basically it's basically in this management adjustment section. You can see it's a journal that is at the end of December 2019 and reverses on the 1st of December, the 1st of January the following year. If I scroll down on it a little bit, you can see, where's the scroll down here? Here we go. You can see it's just a debit and credit, £10,000, unlike a spreadsheet where it just gets put as a journal in a column, an entry in a column. There's actually a proper debit and credit. And we're going to look at this 10,000 or this 101,000 account here. Now, before we move on to looking at the output, let me show you something interesting. When we actually enter the journal, you can choose one of a number of transaction types. Elimination entries or translation adjustments or statutory adjustments and so on. This one's going to be a statutory adjustment. What this means is that when you're doing a report later, because you've grouped your transactions by type or like reason code, if you like, what you're able to do is you're able to include each of these types in or out of a report if needed, so that you can control which adjustments that you've made in a particular report. Similarly, the ledgers that you created are all here. And in this particular example, I'm doing an adjustment for IFRS purposes that does not affect any of my other reporting authorities. And recall, before we move on, it was £10,000 and it goes to this account. Now, if I go back to my P&Ls, back to my trial balances again, this time I'm running it for the UK company. I'm running this time what's called a progressive trial balance report, and it progresses because it starts with the TB from the underlying system and progresses through a series of adjustments. The end of 2019, pounds, it's using the underlying system chart again, and this time we've selected IFRS as the ledger filter. If you look down here, that 101,000 account, there is the £10,000 adjustment we made, taking the original balance and adjusting it to 10,350. If I drill into there, you can see the 350 brought forward plus the statutory adjustment we just made in that prior journal. Now, if I now go and run that report again, but this time by US GAAP, you'll notice that that adjustment is not there. And that is because when I did this adjustment, I did it for statutory adjustments, which is why this statutory adjustment column is shown. And I did it for IFRS only, not US GAAP, which means it will appear in the IFRS report, but will not appear in the US GAAP report. And by doing that, I have been able to make a series of adjustments that are needed only for certain audiences, include them only on the reports for those audiences. And wherever I've done that, I've still got a full audit trail that took me from the very first principles of the data that I brought in to the final figure that I reported on. And no longer do I have to use spreadsheets to be able to act as my system of record, because as I said earlier, they are the only place where you can see how the final balance, was arrived at. Okay, so to summarize, and I'm going through this a little slowly, but there's a lot to see here. If I bring this back on, what we've done now is we've normalized and we've adjusted. So we've got the data in the trial balance, or the version of the trial balance we want at the level we need. Now what we're going to do is build a couple of custom reports to actually show how flexibly we can now report on that data. Okay, so I'm going to bring over my second window, and this has got my reports on it. And we're obviously looking at just a sample, right? But if I go into Report Writer, reports is where my repository of reports is right now. And you can see we're here. And on this first report, we have done a report. You pick the report first. That means that the same template can be used by any company for any ledger against any chart of accounts in any currency for any period, any custom period. And I'll talk about that in a minute because this is important, and multiple different output formats. And so we've got a consolidated report here. I'm using the UK company as the base, but it's a consolidated report, so it could be any base because it includes data from multiple companies. And I've produced it in a PDF, and that PDF is here. And I'm looking at a very simple report here, US, UK, and total. And before we go any further, I'm going to show you a second report. This is an actual versus budget report, same company, same chart of accounts, same currency and date, but a different report. And that report is here. And this has got actual versus month and variance, actual versus month and variance. Now, actual versus budget and variance. Now, on the surface, they look like two completely separate reports. But on closer inspection, they're not as different as you think. So you look at the header's very much the same. The only difference is the name of the report, which is shown here, is different between the two headers. The footer's identical. I mean, next to nothing, it's just a page number. But now we get into the important bit. If you look at the grouping of the lines of information, you'll see that they're identical. It's just they're in different places on the report. And the reason for that is that the one difference between the accounts is that the column layouts, this has got two different companies and a total. On this report, there's some actuals and budgets and variances and so on, but in all other aspects, the reports are the same. The reason for that is that if I go into the edit mode for the report, for the consolidated report, you can see it's made up of a row format, a column layout, a header and a footer. And every report in Mondial is made up of one of each of those components, all of which are definable by the user. Don't need IT help. These are things that can be very easily set up, and I'll show them in a moment. So if I go to the edit report for this consolidated, we've got P&L group, standard header, standard footer. Again, if I go to edit report for the actual versus budget report, editing, actual budget, you'll see it's still the same P&L group detail, same header and footer, only the column layout is different. And what this means is that I can reuse components. So I can set up reports that look remarkably similar and consistent, and I can just change one component to give me a completely different set of information. It could be the grouping of the data. It could be the way in which the column layouts work. Now, if I now go back to, in fact, let's go to the row format itself. This is the row format for the consolidations, the group detail. So it's the same column, same row format that is being used in each of those two reports. If I don't like the word net revenues, I can just change that to net sales. And I can go to my PDF report and I can refresh. Now, what's actually interesting is that I can do that for both PDFs, because both PDFs, see it says net revenues, both PDFs are using the same row format. If I now go back to the first row, the consolidated report, that's changed to net sales. If I go to the other report, that now says net sales. So I've got a lot of ability as a user, as I'm building the reports I need to make them look the way I need to. A lot of you who've used report writers in the past, such as FRX, will recognize some of the structure here. You've got row numbers. We've got a little code here that you can use. That's a little bit different. You can put your own description in. You can put your own formatting in. You can group accounts together on a row. And in fact, one of the really cool things here is if I go to calculation details, when I set up a row format, we actually do allow you to put in a company and some other parameters here. And the reason for that, this can still be used with any company, but this allows you, as you're building the report, to actually check what happens. And you'll notice that if I click this recalculate, it looks at those accounts for these parameters and says, this is what the figure is going to be on the report. So if I go to the report itself, there is the UK figure of 2050413. Go to the other report, there it is, 2050413. And what this does is, as you are building the report, you can get a sense of whether the data is coming out in the way you expect. So you've got complete control as you're doing it. And you'll notice, see how it says change sign here? This is a sales figure. Sales are credit numbers, but people like to see them as positive, so you can change the sign and see them as positive figures. And we did the same with the cost of sale. We turned them into negative figures by changing the sign, so it looks more intuitive to users. And you can use this to do P&Ls, you can use it to do balance sheets, you can do it to do at any level, cash flow statements if you want to, using the indirect method, where you compare periods together, and your consolidations and so on. The other thing that I will show you is the column layout. The column layout, unsurprisingly, is where you specify what you want to see in each column. In this example for the consolidations, there's US and UK, which you saw on the screen. The eliminations column wasn't there because I chose to hide it, just to show you that it could be hidden. And then we've got the totals. You can have various column detail. So for example, if I run the report to December 2019, that is what's called my runtime date. If I've got base -0 here, that would mean I would see information from 2019. If I made it base -3, I would see information from 2016, because it would be -3 relative to the date I ran at the year at runtime. And similarly, period offset, if I ran December and said -4, I would actually get September. So would it be September? No, it would be August. So it would be 4 months prior. And then further down, just a little more detail, you can filter by the different transactions that you get. So these are the transactions from the source system, Business One or whatever. And these are the transactions you can put into Mondial, and you can mix and match and determine which columns you want to see them in. So for example, if I put my elimination entries into Mondial, I could even choose to see them in a completely separate column. So my US and UK figures would be gross, there would be my eliminations, and there would be the net balance, having taken the eliminations and intercompany adjustments out. A couple more things to just show you before we finish this section. Business One actually has the concept of dimensions and cost centers at the line level on a transaction. We actually bring that data in, and you can even filter your columns by those dimensions. So I think if I go here, I've got a few here, I can actually begin to do cost center reporting, or project reporting, or department head counting, or whatever I was using my dimensions for, because we bring in the transaction level detail at the line level. we can actually filter every transaction by these dimensions. So that's a nice feature for management reporting. And then finally, when it comes to the companies, by default, the company that you put in when you run the report at runtime, in this case, the UK company, that usually is the company that all of the data's for, unless you use these columns at the bottom. And these columns at the bottom is when you want to do consolidations and you want to bring one or more companies' data into an individual column. So if you're doing regional reporting, you could put more than one American company in there, more than one European, more than one Asia, that sort of thing. And you could also have, so you could have multi-level consolidated roll-ups. Final thing I will show you as this part of the report writer, there's so much flexibility in this report writer. Not only do we do it in PDF, you can run a report by PDF to the screen or to Excel, or pre-formatted in all areas. If I go to the one that we generated on the screen, which is here, this is the same report. You see the header and you can see the same information. If I go to depreciation for the US company and I drill into it, the first thing I get to are the group accounts that were grouped together on that row to give you depreciation. And then when I drill into that, I see the 4 segment accounts from my underlying system that were grouped to that group account. And I can drill down further, as you might expect. If I go back to the report, but I go to the UK column and I drill on depreciation, once again, I see the group accounts that I grouped together on that row in the row format. But when I go into freehold buildings here, I now go to the UK accounts. And in fact, I only mapped one account here and I can drill in there. And as before, I can do the drill down. And that were really, just to finish with, was an example of the mapping where these two companies have been set up with completely different chart of account structures, but their data can be mapped to be on exactly the same row in the same report with no user input once the original setup has been done. So that's about it. Just to summarize, what we started with was an explanation of how we brought the data in from multiple systems. We aggregated the data in a single location. We mapped it so it was consistent. We turned it into different currencies. We showed how to adjust it for different gap reasons. And then we finished up with a little tour of the type of flexibility that you can build into the reports to give you the layouts that you need and are needed by your users. So that's about the demo for right now. Obviously, there'll be more questions from everybody once they've had a chance to digest what they've seen. But that's it for now. Thanks for taking a look at the demo. And I hope this was a useful aid for people wanting to learn to demo Mondial to customers for the first time.